Hi everyone, this is a technical analysis on USDJPY. Let's start with a fundamental overview first. The USD has been marginally stronger in the past couple of days, as despite a softer US CPI and US PPI reports, the components that feed into the core PCE increased the Fed's preferred price index. In fact, the core PCE year over year is now projected at 2.7% versus 2.6% prior, while the month on month measure is seen at 0.3% versus 0.3% prior. On the JPY side, the data recently started to come out on the softer side, and Governor Ueda recently didn't sound like someone who's in a hurry to raise rates amid some uncertainty. The Japanese yen in the past couple of weeks has been supported across the board more by the risk of sentiment and falling treasury yields rather than domestic fundamentals. Today we got the news that Japanese firms agreed to lower than demanded wage hikes. This didn't change the market pricing of 31 bps of tightening by year end, as traders await more data on the inflation front to increase their expectations for another rate hike. Now on the daily chart, we can see the USD/JPY failed to sustain the break above the key 148.60 level on the first try, but the buyers are now trying once again. From a risk management perspective, the sellers will have a better risk reward setup around the trend line to position for a drop into the 140 handle next. The buyers, on the other hand, will want to see the price breaking above the trend line to increase the bullish bets into new highs. On the 4-hour chart, there's not much we can glean from this time frame, but the buyers will likely continue to pile in as long as the price stays above the 148.60 level, targeting a pullback into this trend line. The sellers, on the other hand, will want to see the price falling back below the 148.60 level to regain control and push the price into the new lows. On the 1-hour chart, there's not much else we can add here, as the buyers will continue to pile in above the 148.30 and 148.60 levels, while the sellers will look for a break lower to position for a drop into the 140 handle next. These red lines define the average daily range for today. For the upcoming catalysts, today we conclude the week with the University of Michigan Consumer Sentiment Report.